Hey there, everyone. Welcome back to the channel. If you're watching this in 2026, you're already living in a world where artificial intelligence has become the backbone of modern finance. But here's the thing. Most people still don't fully understand what that means for their investing. Today, we're diving into the AI revolution in investing and breaking down the strategies that will define your financial future in 2026. This isn't just about flashy tech or futuristic concepts. These are real, actionable steps you can take right now to stay ahead of the curve. Let's get started. So, first things first, why is AI taking over investing in 2026? The short answer? Because it's faster, smarter, and way more accurate than anything humans can do alone. Let's talk numbers. By 2026, the global AI and finance market is projected to hit over $15 billion, up from just $4 billion in 2022. That's a 300% growth in 3 years. And why? Because AI isn't just making things easier, it's redefining what's possible. Take algorithmic trading, for example. In 2026, AI-driven trading algorithms account for over 70% of all trades executed on major stock exchanges. That's not just a stat, it's a seismic shift. These algorithms can process millions of data points in milliseconds, spotting patterns humans can't see. In 2025, a hedge fund called AI Alpha used machine learning to predict market movements with 92% accuracy, outperforming the S&P 500 by 3.5% annually. That's the power of AI in action. Now let's break this down. First up, algorithmic trading and high-frequency trading, HFT. These aren't just buzzwords, they're the engines driving today's markets. In 2026, HFT firms are using AI to execute trades at lightning speed, leveraging real-time data from social media, news feeds, and even satellite imagery. For example, a major Wall Street firm, Quantum Edge, deployed AI to analyze social media sentiment around a new product launch. Within seconds, their algorithm identified a surge in positive sentiment and executed a trade that netted them $12 million in a single day. That's not luck, it's AI working at its peak. But here's the catch. These systems are so complex, even the biggest banks are struggling to keep up. In 2025, the SEC reported that 65% of market volatility was linked to AI-driven trades, highlighting the double-edged sword of this technology. But wait, this isn't just for Wall Street. Retail investors are also getting in on the action. Robo-advisors like Betterment and Wealthfront have evolved into AI-powered platforms that offer personalized investment strategies. In 2026, these platforms manage over $500 billion in assets, up from $200 billion in 2022. How? By using machine learning to analyze your risk tolerance, financial goals, and even your spending habits. Take Sarah, a 32-year-old teacher in Toronto. She used an AI-driven robo-advisor to create a diversified portfolio with a 7% annual return. The AI adjusted her investments automatically when the market dipped, avoiding a 15% loss that her peers suffered. That's the magic of automation. Now, let's talk about predictive analytics. In 2026, AI isn't just reacting to market movements, it's forecasting them. A company called Neural Forecast uses deep learning to predict stock prices with 85% accuracy. They analyzed over 100 million data points, including economic indicators, geopolitical events, and even weather patterns. For example, when a hurricane threatened the Gulf Coast in 2025, their system predicted a 12% drop in energy stocks a week in advance. Investors who followed the advice avoided a massive loss. But here's the key. These models aren't perfect. In 2024, a predictive AI model failed to account for a sudden regulatory change in the EU, leading to a 4% loss for users. So, while AI is powerful, it's not infallible. That's why diversification and human oversight are still critical. Next up, risk management. AI is revolutionizing how investors assess and mitigate risk. Traditional methods rely on historical data, but AI can simulate thousands of scenarios in seconds. A fintech startup called RiskGuard uses AI to model the impact of a 10% interest rate hike on a portfolio. In 2025, they helped a mid-sized firm reduce its risk exposure by 22% without sacrificing returns. But AI isn't just about avoiding losses, it's about optimizing for gains. Take a hedge fund called AlphaHive, which uses AI to identify undervalued stocks. In 2026, their algorithm discovered a small biotech firm trading at a 30% discount to its intrinsic value. By investing in that company, AlphaHive generated a 45% return in 6 months. That's the kind of edge AI can give. But let's not forget about market sentiment analysis. In 2026, AI is reading the internet like a pro. A company called SentimentX uses natural language processing, NLP, to analyze news articles, social media posts, and even TikTok trends. In 2025, their system flagged a surge in negative sentiment around a major tech company, prompting investors to sell before a 17% drop in its stock price. The catch? Sentiment analysis isn't foolproof. During the 2025 crypto crash, some AI models misinterpreted a viral meme as a bullish signal, leading to a 20% loss for those who followed. So, while AI can give you an edge, it's not a crystal ball. Now, let's shift to ESG investing. In 2026, AI is making it easier than ever to align your investments with your values. A platform called Green AI uses machine learning to analyze company sustainability reports, supply chains, and carbon footprints. In 2025, they helped a fund called EcoFuture achieve a 12% return while reducing its carbon footprint by 35%. But here's the twist. AI isn't just for large funds. Individual investors can use tools like ESG Score, which ranks companies on environmental, social, and governance metrics. For example, a 28-year-old investor in Berlin used ESG Score to avoid a company involved in deforestation, saving themselves $50,000 in potential losses. That's the power of AI-driven ESG analysis. Portfolio optimization is another area where AI is making waves. In 2026, AI algorithms are constantly adjusting your portfolio to maximize returns while minimizing risk. A firm called Optiport uses reinforcement learning to tweak asset allocations in real time. In 2025, their system helped a client rebalance their portfolio after a market crash, recovering 8% faster than the average investor. But how does this work? Imagine your portfolio as a puzzle. AI identifies which pieces, assets, are underperforming and swaps them out for better options. For instance, if your stocks are down 10%, AI might suggest shifting to bonds or real estate. The result? A more balanced, resilient portfolio. Now, let's talk about AI-driven hedge funds. These aren't your typical hedge funds. In 2026, a hedge fund called Quantum Hedge used AI to short sell a tech company after detecting a pattern of financial misreporting. Their algorithm flagged the company's earnings report as suspicious, and within a week, the stock dropped 25%. That's the kind of precision AI enables. But here's the catch. These funds are expensive. In 2025, the average management fee for an AI hedge fund was 2.5%, compared to 1.5% for traditional funds. So, while the returns can be staggering, the costs are higher. That's something to consider before jumping in. So what can you do? First, start small. Use a roboadvisor to get your feet wet. Betterment and Wealthfront are great options, but don't limit yourself to just those. Explore platforms like Robinhood or Webull, which now integrate AI-driven tools. Second, stay informed. Follow AI-focused news sites like AI Finance Today or listen to podcasts like the AIinvesting Show. Third, diversify your approach. Combine AI tools with traditional strategies to balance risk and reward. Fourth, invest in AI itself. ETFs like the Global X AI and Robotics ETF, BOTA, or the Invesco S&P 500 AI and Big Data ETF, AIB, offer exposure to the companies driving this revolution. But let's be real, AI isn't a magic wand. It's a tool, and like any tool, it requires understanding. In 2026, the most successful investors are those who blend AI with human judgment. They use AI to identify opportunities, but they make the final decisions. That's the key. So, don't panic if you're not an expert in machine learning. Start small, learn as you go, and stay curious. The world is changing, and the future of investing is here. If you enjoyed this video, hit that subscribe button and turn on the notifications so you never miss out on the next episode. If you have questions or want to share your own experiences with AI and investing, drop them in the comments below. And if you found this helpful, share it with a friend who's trying to make sense of the financial world. Thanks for watching, and remember, stay informed, stay curious, and keep investing wisely. See you in the next video.